Good morning, traders, investors, and market enthusiasts. Ken Goldberg here. It is Monday, September 21st, and let's look at the markets here. They're about to open in the cash markets. We put out some work pre-market calling for a market to bounce, indexes to bounce as high as 50% back up to the peak of Thursday's late peak reversal. Here's the Dow Jones coming up in the upper right-hand corner, the Dow futures. You can see here's the Thursday peak and reversal right up here at the purple dashed line. That's the upper Bollinger Band, and the slide since. Sometime today we should get a, well, here's what I'm looking at. So here was a reversal Thursday. This is a 122-minute chart blown up. We've got one down, two up, either 3, 4, 5 down, and this is the bounce, or this is just wave 3 down, and this is the bounce. If the markets turn south in the next 15 to 30 minutes, they're going to find support right here in the Dow futures at 16,150, and then they're going to bounce back up towards 16,400. Take a look at the cash, Dow cash, and see if that adds any clarity. Yeah, the cash actually looks like all of 5 waves down could be complete, and today could look something like an up, down, up. This is 122-minute bar, so it could take all day to do that. Green line, this is the downtrend line off of the peaks from the all-time highs. Turned the market perfectly on Thursday. Markets finally spiked up back to the line. Last time they saw the line was August 18th. Prior to that, they saw it at the all-time high in July. Look at the intraday stochastics, oversold, kind of hooking up. They need to cross up above the green and up above this 10% dotted threshold down here, and that will give the bulls a few more hours. The line in the sand is here now, the high from Thursday. For the bears to remain in control, which they currently are, this red line that crosses 16,930 in the Dow must maintain. S&P 500 cash. Here it is again. I've already annotated this. This is the chart that appears in the DSETRADING.com article that just went live a couple minutes ago. Here's the fully developed wave pattern of what should happen. We came down in 5 waves to the Friday intraday low, little bounce, big slide, day or two of choppy sideways, and then a slide that takes out the August lows. That has the potential to complete in the next 3 to 13 days with tighter window in the next 3 to 8 days. It could stretch out. It's unlikely that it will. 3 to 5 days should be all that's needed, even if that, to take this market to below the August lows. Once it gets below the August lows, the biggest rally since July should follow. About the same size, maybe a little bit longer in time than this bounce of a couple weeks here. Again, the S&P 500 cash line in the sand of bearish control. There it is right there, bold black writing. The market has no business being up above this Thursday afternoon reversal point unless the bulls are about to take control. So we're going to be keeping an eye on that. NDX. What happened there? NDX by 1 second. NDX had a bigger bounce than the other indexes, and this is its line in the sand. The NDX cannot go up above 45.05. Tried to, but it didn't get it. And today, 1, 2, 3, 4, 5, it may try and fill this gap here. That gap would be filled at about 43.85. Those that follow the Russell. There's a Russell similar line into the August low and bounce. Don't forget the Russell led the other indexes from its peak. Get back down. That's the index picture. Again, bounce for a little bit, and we'll update that in the next 30 to 45 minutes. We'll see how the pattern is rolling along. E-mini futures, though, while we're here. S&P E-mini futures. I'm going to blow it up so we get a bigger picture of it. Zoom it in. By the way, welcome to all the new people that joined this week. Get you up and running and familiar with how we do it over the next couple of hours here. So here's the S&P. The line in the sand was up here, similar to the NASDAQ, the low from the all-time high to the first peak. It actually could be as high as 2062. For now, we're going to leave it here at 2035, because what's happened since Thursday is this line in the sand of bearish control has moved down to the 2012. Remember, this is futures. In the cash, it's 2020, and the futures right here, it's 2012. Some of you I know trade futures, some don't. Either way, we usually give both. Notice the daily stochastics have crossed down. Independent sell signal there. Here's the bounce that we've been looking for. Late last night, published it early this morning. And that's the E-mini futures. Take a look at the bonds. Bond futures coming up, and then we'll get to the yields. I might stop over in the TLT ETF if you guys like that. Type TLT if you like to see the ETF chart. Otherwise, I'll assume that you can do it on your own from the bond futures or the yield futures. Happy to show the TLT if that's what you like. So type TLT in your chat typer, and if I see it, I'll look at it. In the meantime, this is the bond futures. Got heavily short up into the August spike, covered it into the late August, early September lows. Been sitting mostly on the sidelines with small short exposure, looking for this rally up into the 157 to 159 area. We got the first up of an up, down, up. This should be the intervening down of an up, down, up, down, up. And as this week progresses, hopefully we'll get a test up here along the blue arrow so we can reshort. You can see the daily stochastics have room to rise, so that's why we think there'll be this down will be followed by one more up into the higher price where we'll short them heavily. What's that look like on the yield chart? Here's a 30-year yield. We've been tracking this. I'm in the upper right-hand corner, the daily bar chart. We've been tracking this yield bounce off that August spike, high in bonds, low in yields. Look one chart to the left. This is the weekly bar. Puts this daily bar into perspective. Off the January low, 5-wave rise into June. Corrective decline into August. And we're starting to get some type of acceleration out of there. Now, we don't know whether this entire decline off of the June high is complete. This chart could come down into here and then go higher. It could come down all the way into here and go higher. As long as the January low remains intact, yield bulls are in control, which means price bears are in control. Yields higher, prices lower. As long as these stochastics are heading down, we have to give this price chart room to come down along the blue arrow's path. That kind of looks something towards a 2.86 yield, currently 2.97. So it's got support down here in the 2.86 area. That won't take too long to manifest. That should take no longer than this week if we're going to get down there. Just for kicks, let's show the TLT. We're here in the interest rate complex anyway. And let's look at the weekly chart. This is a chart that I've published several times in DSETRADING.com, as well as in WaveBoom. Here's the big high in January. TLT coming down in what can be counted as 5 impulsive waves down. That's either big wave 1, Arabic 1, or A. Bounce into the August high was big Arabic 2 or B. And the turn down in, these are weekly bars, so this is a weekly stochastic, that's intermediate term. Big turn down, stochastics coming down, prices coming down. So the price is now in sync with the crowd's sentiment towards lower bond prices. The crowd is adopting the higher interest rate mentality. The Fed is the only one that isn't getting the memo yet. They will. There's a TLT on the weekly basis. Sometime in the next 9 to 18 months, we should see TLT down towards 106 at the minimum. Why the minimum? Because this yellow band is much deeper than 106. It's actually 98, give or take 6. And so either the minimum of 106 should be reached, or this decline could extend into the lower yellow region. Remember, we always look for alternate counts. What if we're wrong? What if we're wrong in direction? What if we're wrong in degree? What if we're wrong in the assertiveness of a market? So that's why we can kind of say the DSE will tell us what to do when prices get down here. Regardless of where price is, when the DSE flashes a signal that we should no longer be using selling actions and we should be using buying actions, it's irrelevant what the price is. The actions determine when at least a short-term direction change is coming. There's a weekly TLT chart.